Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Jake V., Paul M., Cindy W., Sean M., and Joe G. We've got a returning guest on the program today, and one we're pleased to have back with us. Mr. Greg Smith has joined us. Greg is the president and CEO of Equinox Gold. The company is a growth mid-tier gold mining company that has operations across 4 jurisdictions in North and South America, with its newest operating Greenstone mine in Canada. Equinox Gold is now managing a total of 7 mining operations in these jurisdictions, with 1 additional mine on care and maintenance. With its Greenstone mine, the company anticipates that the mine is expected to produce, on average, 390,000 ounces of gold annually for the first 5 years, and 330,000 ounces per year thereafter for the rest of its initial 15-year mine life. The company is also advancing a number of expansion and exploration opportunities within its existing portfolio. Equinox Gold is listed on the New York Stock Exchange under the symbol EQX, and also on the Toronto Stock Exchange under the same symbol, EQX. Mr. Smith, thanks for coming back on to update on Equinox. Welcome.
Thank you, and thanks for having me again.
Yeah, Greg, it's good to have you back. Well, why don't we kick it off here? We're coming towards the end of the year here, not far away. Your thoughts on how the gold market and the mid-tier gold producer segment acted during 2024, as well as what your thoughts are for how you think things go, Greg, for 2025 on the producer side.
Well, I think it's fair to say that 2024 has been a great year for the gold price, certainly, and that's had an effect on all the mid-tier and senior gold producers in terms of their cash flow generation, etc. I think there's been some volatility for sure in the share prices of the gold sector, and some companies have done really well, some have lagged, and I think generally speaking have lagged the gold price as a group during 2024. So, good from the perspective of these gold prices are wonderful and really helpful to everyone's business, and maybe a little disappointing in the share performance, although has been, I think, a positive year, more or less in the mid-tier space, maybe a little less so in the senior space. 2025, it was interesting in October to see an early November here with gold waffling a little bit on the election results in the United States. That's starting to, I think, work its way through the system. We're seeing the gold price come back to life here a little bit in December. And again, I think if this price persists into 2025, it's going to be a great situation for the gold producers and in particular for Equinox. So I'm pretty bullish on 2025. I think there could be some volatility, new president, a lot of geopolitical issues in the world right now, and we'll see how those get resolved. And the economic state in the United States, frankly, it feels really positive, I think, off the back of that election, and maybe that means rate cuts are going to be pushed out a little longer than maybe the market thinks. I don't know. But my general feel is pretty optimistic on 2025 generally, and in particular for the gold producers.
Yeah, and I think we'll also see, of course, at the Equinox level, we'll see that production profile start to levelize a bit here with Greenstone coming online. So I think that's a reason to be excited for 2025 results. Aside from the other market conditions that we're seeing out there, it's going to be an interesting one for sure. It's definitely going to be a year that'll definitely have some events involved here, and we'll see how things move forward. With that, Equinox posted 3Q 2024 results during early November. Cover for the audience, maybe most of our folks in the audience probably haven't read through those line by line, but cover off just the key items coming out of those results, Greg, and then we'll get into some specifics and some of the operations.
Q3 this year for us was one of the best quarters we've ever had, actually, for Equinox. In terms of our revenue, for sure, 428 million in revenue, almost $1 billion for the first 3 quarters of the year. In our adjusted EBITDA number, which was 142 million in the third quarter, and our operating cash flow also substantially higher than in previous quarters, about 139 million after changes in working capital. And we have a slide in our deck, Andrew, that kind of highlights this, our quarterly results over the last number of years, and then our third quarter results. And you can really see that there was an inflection point for the company in the third quarter, and it really is the Greenstone mine coming into production. Wasn't in commercial production in the third quarter, but we did book the revenue and the costs and the production on our income statement. And even before hitting commercial production, Greenstone delivered a substantial boost to our financial results in the third quarter. And you can really see that graphically on that one slide in our presentation.
Good to see the progress. And I think overall things are acting pretty well for Equinox here. And folks need to have a little bit of patience here as we get Greenstone fully up and going. And we should see that during 2025 at some point here. So I appreciate the thoughts on that. And where do you see, you guys have already guided on this, but just any comments how you see the final numbers coming out as far as production and also all-in sustaining costs to wrap up 2024? Just any thoughts on that?
Yeah, as part of our Q3 results here, we did update our production expectations for 2024 to somewhere between 590,000 and 675,000 ounces of gold. We'll be well within that range at the end of the year. I'm not expecting any surprises at all. And, on average, our costs, for the fourth quarter should be lower than what we've seen year to date. And that's primarily a function of having a much larger denominator in terms of gold production compared to previous quarters. So we're feeling pretty good about the fourth quarter. I think it's fair to say that it'll be another very strong quarter for the company. And, nothing that should be too surprising to anybody.
Very well. And why don't we talk Greenstone, because this is the denominator changing bit, the ramp up, Greg, that's ongoing here. Give us an update there at Greenstone, how things are looking at site. And, if you can speculate here a little bit, when steady state would be reached potentially there in 2025, as well as any unforeseen bottlenecks and challenges that have come up with the ramp up work.
Sure. Yeah, we did put an update press release out in October. Basically, we had to guide down our 2024 expectations. I think we were a little too ambitious earlier in the year, and the realities of commissioning a large mine like this, things were going really well, and then we had a couple things we had to deal with, and we had to resolve those issues, and it had an effect on our production in 2024. But we're feeling really good about the mine and the way it's progressing and how the ramp up's going. I guess the best way to put it is steady as she goes. We're seeing consistent increases in mining rates, which is important, and in our mill throughput rates, which is also important. Recovery is an area that we've been a little bit challenged on mechanically, and in part because where we are on the mine plan for grades, and we're starting to see that come up nicely here in the last couple of weeks as well. So continuing to have good, solid progress at Greenstone. We should meet our production estimates that we put out in October and for the Greenstone mine. And then in 2025, really the focus will be on continuing that ramp up, certainly through the first quarter. And as we get into the second quarter, we would expect to start hitting that throughput target of 27,000 tons per day through the mill on average. We've had many days in excess of that, and we've had multiple days where we're hitting that. Where we're still working is on downtime in the mill, where we're dealing with small things, maintenance, that type of thing, in excess in terms of time that we need to take, to get that full production throughput. So crusher, the mill, it can handle the material, no problem. Now we just got to make sure the availability is there to maintain those throughput levels. Cost structure has been great at Greenstone. Very happy with that. Continuing to ramp up the workforce. We've got 4 new haul trucks coming in here at the end of the year and into January, so that'll be another step change in mining rates as well. And we just got to keep our eye on the ball here and continue to ramp up and deal with things as they come. There's a couple of areas where I think over the course of 2025 we'll put some focus on, which I'd call it debottlenecking, making things a little smoother. There's some areas we've identified that I think could really improve throughput, and that's having more access to crushed ore stockpiles, maybe fine ore stockpiles as well, where we've got those stockpiles, but what we're finding is it would be helpful to have a higher volume in each of those areas, and that's something that in 2025 we'll look to engineer and remediate. A few other areas that we're making some changes. We're making some mechanical changes in the tanks with respect to some of the valves. We've made some changes to some screen decks, some feed chutes, that type of thing. All pretty minor, but important in terms of getting the whole plant dialed in and being able to hit those production targets. So it's going well. The guys are working hard at it, and we're feeling pretty good about it overall.
Greg, thank you for the details. And, I think, you look at some comparable companies out there and pretty hard to hit on a new build like this. It's hard to hit right out of the gate and get exactly to the numbers, the nameplate expectations without any trouble. I mean, that's almost impossible these days given the market conditions and the lack of expertise that's out there, all the different parts, bells and whistles that need to go into this, some of the equipment that goes in, and obviously quality of equipment. There's so many factors here that weigh into this, and there's very few companies, I haven't seen any recently, that's been able to hit that right on the dime. I mean, there's a couple out there that we've seen now meet expectations and start to exceed expectations, but this is years down the road into working out those issues. With Greenstone, just one other thing there, and then we'll move on. On the cost profile, we've talked about this a little bit already, but, on a company wide consolidated basis, Greg, and again, this is speculation into 2025. We don't know how cost escalations will play into 2025. My guess is there'll be a couple surprises, but just on a company-wide basis, with Greenstone production pending to change this materially in 2025, just any expectations or maybe any flavor you can give the audience on where you might speculate that the cost profile will be company-wide on an all-in sustaining basis during 2025?
Well, we'll give formal guidance in February 2025, which is what we do every year as part of our year-end reporting. So I don't want to give guidance ahead of that, but I can say that, Greenstone will be a much larger portion of our overall production profile, and it is our lowest cost mine. And so you now are introducing a big proportion of our production at a much lower cost than what our average has been over the last number of years. So that'll have the effect of reducing our overall cost structure in 2025, compared to previous years. And I think you'll see that in our Q4 this year as well, as Greenstone starts to contribute a higher proportion of overall production. The Greenstone's in Ontario, Canada, and certainly we're benefiting a little bit from the exchange rate as well. So it's been a pretty positive situation for Greenstone so far. As you increase volume, and I mean that in terms of mining rates as well as throughput through the mill, you start to just increase that benefit of scale, right? So again, feeling pretty good about the cost structure at Greenstone. That has a knock-on effect to the rest of the company. And Andrew, just to go back to one of your comments there on, the ramp up, one thing I would say, and this has been probably a more frustrating aspect of it for me anyway, is that, we've been pretty good at identifying issues as they've come up and determining what the best mitigation is. The real challenge has been around getting either parts or getting things engineered, fabricated, and on site, in terms of the lead times to get some of this stuff remediated. And that really, I have to say, has been one of the challenges we've had. And a little bit of it is I think still a hangover from the pandemic and some of the supply chain issues that have kind of manifested over the last number of years. And there's situations where we're looking to get spares, and we've sort of used all the spares the vendor might have, right? And in situations like that, so it's been a pretty positive experience overall in terms of the ramp up. And really, where the challenges have come in is, okay, here's the issue we're dealing with. Now we got to resolve it, and how long is that going to take? And sometimes you're like, what do you mean it's going to take 8 months? It's these lead times that can be really challenging, and unfortunately, that's the market we're in. And we've been pretty good at finding, alternatives and solutions, but in some cases, you just got to wait.
Yeah, those are very good points, Greg. And you certainly have more incompetence starting to prevail in some of these outside areas in manufacturing. You never had a full recovery. We all hope for a full recovery of the industries, but we're going on now 5 years down the road here, and who knows what else is on the docket for the coming years. But it's been a real challenge. I concur with that. We've seen a lot of problems, and staffing and expertise has been certainly at the forefront of that, aside from material shortages, supply chain issues, period. I do think that that's a key area that we need to be concerned about and need to try to mitigate the best we can with obviously forward planning. And then, you guys as well, all these mines are a little bit different, and that's just the reality. They're actually sometimes quite a bit different. You guys were able to build Arizona, you guys were able to do Santa Luz, Castle Mountain. All of them didn't go perfect, but certainly they did well. But just for folks, they have to remember that all of these are all different designs. They're different deposit types, all kinds of different things that go in here. So, overall, to see where you guys are today, I think is positive, and we'll be able to see more upside in 2025, I would think here. So, on the balance sheet side, Greg, how are things looking on that front with cash here, debt, convertibles, and then also just how you see potentially that balance sheet improving during 2025? Just talk about that as well.
At the end of the third quarter, which was the end of September, we finished the quarter with right around 168 million in cash and net debt of about 1.3 billion. And you'll recall that we took on another 500 million in debt back in May when we concluded the acquisition of the 40% of Greenstone we didn't already own. So we took on some debt this year in order to get that acquisition done. It's now a focus for us certainly to start to reduce that overall debt. We in October did have 140 million dollars of our convertible note convert into equity, and so that took 140 million dollars out of the debt just there in October. That's not reflected in our Q3 results. In the meantime, our plan going into 2025 is to take some of this operating cash flow, and we expect fairly robust operating cash flow in 2025 through the year, and use that to reduce our overall leverage. The easiest option for us is to park as much cash as we can on our revolving credit facility, at 9% plus per annum interest rate. We get 9 cents on the dollar right away for doing that. So that's a nice, efficient way of reducing our interest expense and our leverage. And then in September of 2025, we do have another convertible note that matures, and that'll either convert, I believe at $6.50 US, or we would just pay that back with cash on hand. But deleveraging the balance sheet is certainly something that we intend to focus on in 2025 and into 2026. I'm a chartered accountant by trade. I have no problem with the use of leverage to build your business, but I also believe in a certain amount of risk mitigation, especially in commodity-based companies like gold mining companies. And so having a lower level of leverage is something that we feel is important and we'll focus on in the next couple of years.
Yeah, I think that's the right way to look at it. And I think folks will get a good flavor just as to what that ability is to pay down that debt as Greenstone comes on here and gets fully ramped up and gets to that nameplate, if you will. And then also on that front too, I just encourage the audience, just take a look at Equinox's materials. You're able to get a rough ballpark number on what that cost profile looks like with a fully operating Greenstone. So you can do a quick indicator of where that looks, and also the company's ability to handle some of that pay down as well in 2025, 2026. So I encourage the audience to do a little bit of work and take a look at that. Okay, Greg, I want to move south to California, United States operations. Give us an update on Mesquite operations as well. Now in care and maintenance, Castle Mountain due to phase 2 expansion work with the permitting stages. Just talk about California, US.
Yeah, Mesquite, it's been a great mine for us. When we bought it, it had 2 or 3 years of life ahead of it, and we've continued to be able to maintain, 2 or 3 years of life ahead of the mine. It is a mature mine, and the mine plan associated with Mesquite can get a little bit complex. Broad strokes is that we tend to have periods of high stripping, and then we have periods of harvesting ore and higher production, and that's what we saw in 2024. This year has been primarily a pre-strip year. We have not stacked a whole bunch of fresh ore, and that's because we've been developing our Ginger deposit, which is a new deposit at Mesquite, but it required a fairly robust stripping program to get there. Into sort of the first quarter of 2025, we'll be very near the end of that stripping program at the Ginger pit, and so 2025 will see us stacking a fair bit of ore out of Ginger. And so, higher production profile at Mesquite for 2025 as compared to 2024. And we're continuing to develop additional ore resources at Mesquite, and try and keep that mine going as long as we can. There is potential for, for a meaningful increase in mine life at Mesquite, but it's a bit complicated. It requires moving a highway, which has been moved once before to accommodate the pit, and there's no reason to believe it couldn't happen again. But the permitting timelines are fairly long to do that, and so it's something we're looking at, but it's not a near-term item. So in the meantime, we've continued to be able to develop additional ore sources within the existing plan of operations at Mesquite, and 2025 is going to see the results of the work we've done this year at Ginger. And then at Castle Mountain, correct. So we had been running what we called phase one at Castle Mountain here for a number of years. It was designed really to accomplish excavation of the historic pits that had been backfilled with waste. And back when the mine operated, it was waste. Today, that waste had enough mineralization that you could produce gold from it and offset the cost of excavating those pits. They needed to be excavated for the big prize at Castle Mountain, which is phase two, which is a 200,000 ounce a year producer with a nice long mine life. And what we were finding as we kind of got to the end of last year and into this year was that the material in the pits was becoming a little more complex. The grade wasn't as evenly distributed. Some of the material didn't lend itself very well to leaching, and it just became kind of an expensive hassle to keep running it the way we were running it. And we had largely accomplished what we wanted to accomplish. We've been running it a little longer than we had anticipated. And when you start looking at the alternative of using bigger trucks as phase two to just complete the work, it started to make a lot more sense to do that. So we did put it on the operation on care and maintenance, but that doesn't mean we've stopped work at Castle Mountain this year and into 2025. We're very focused on advancing the detailed engineering. This is to ensure that in late 2026, when we expect to have the permit authorization, we're in a good position to start the construction of Castle Mountain, make that decision, start that construction with a high degree of confidence in what that build will look like. In terms of permitting, we've been working really well with the BLM over the last couple of years here. We did get our notice of completion from the BLM in 2024. And the next stage of the permitting process is to get the notice of intent. And that'll kick off what I would call the formal regulated permitting process, which has a time frame of about 2 years or less to get your final permit to proceed with construction. The BLM and the Castle Mountain team, they've advanced the permitting. We've appointed the independent engineering firm that'll work on the EIS. The notice of intent is expected to be received sometime in the first quarter of next year. And so things are progressing well from a permitting perspective at Castle. And right now, our estimate is we would have that permit probably in late 2026, which would put us in a position to start construction, at late 2026, call it early 2027. And that would have us in production sometime in 2028 at phase two at Castle Mountain. And really, a mine like Castle, 200,000 ounces a year in the United States, mine life of, 13, 14, 15 years, that's a very attractive asset. And so we consider that a really important growth opportunity for Equinox.
Greg, absolutely agreed. And given existing conditions there, to be able to get this through the permitting red tape and the burden in the United States, I do think with an existing operation in place, still challenging, of course, but definitely easier than a greenfield permit. So appreciate the thoughts on that, and certainly an important project when you look at that production profile on an expanded basis. I'd like to move further south to Los Filos in Mexico. I'd like to get your thoughts on 2024 operations at this mine, as well as your thoughts on the timing of the potential carbon and leach processing plant expansion, as well as the underground work.
Los Filos is always a more complicated mine to discuss for us, and that's because it's our largest deposit. It's an incredibly prospective and attractive gold deposit. It's in a country that has a long and positive history of mining. It's an area that we see as having a lot of potential, and so it ticks a lot of boxes for us. The challenge we've had is there are some legacy agreements there with local communities around how the operation needs to operate and the cost of operating. And these need to be both renegotiated and extended so that there's a long-term um, fiscal environment in which to make an investment decision to build that CIP plant. And really, Los Filos needs that plant because as you go deeper into the open pits and as you go underground, you get higher grade material. Some of that material has a copper component and it does not lend itself well to recovering on a leach pad. So you really do need that mill to get the best recovery on that ore and to get the best economics on expanding Los Filos as a long-term mine. And so we've been working with the local communities for the better part of a year around some new agreements, which would set the stage for Los Filos Part 2, as we call it. And we're in the middle of negotiations, and so I can only comment so much. But what I would say is the communities have been engaged in these discussions. I think it's fair to say that everybody involved wants to see this mine run for the long term, and so we're all working with that objective in mind. No assurance that we'll get it done, and if we're not able to get it done, there's a very real possibility that we'd have to suspend operations at Los Filos, and I don't think we want to do that, or the communities want to do that, but it'll be the reality of the situation if we can't come to new agreements. So that's one thing that's kind of sitting out there as a possibility for 2025. This is something we've talked about, in the market now for the last couple of years. So this is not new information, but it is something that is coming to a head sometime probably in Q1 next year. Other than that, it's again we love the deposit. There's a lot of potential at Los Filos. The construction of a plant there could increase production to that 250 toward 300,000 ounces of gold per year. The Bermejal underground deposit's a very attractive deposit. We had started mining in there back in 2022. We suspended it when we delayed the construction of the plant. So in the context of getting some agreements renegotiated and starting to advance the engineering and some of the permitting we need to do that CIP plant, we would then also look at restarting underground production from Bermejal again, probably sometime next year. So a lot of moving parts at Los Filos, but again, big asset for the company. 2024 has actually been a great year for Los Filos. It's a little higher cost, which is, again, part of it's these agreements, part of it's the nature of the deposit as it stands today. But we're going to have a year where Los Filos is producing, upwards of 170,000 ounces of gold. So it's been a good year in terms of headline gold production at Los Filos. We have a great team there, and I'm really positive on what I think they can accomplish there. We just got to work through a few things there over the coming months, and then hopefully we've got a nice runway there at Los Filos.
Appreciate the update on that. I know that's something that's been ongoing for the last couple of years, and definitely this year it seemed like steady state basic operations were going at the mine and pulled out some reasonable numbers here given the conditions. It seems that from a technical perspective, it wouldn't make a lot more sense soon to continue operations as they are. It sounds like that the expansion is really needed to get the most out of the operation. So obviously all of those things need to fall in line in order for it to really continue down the road over the long term, is what I'm hearing here. And so hopefully the community understands the importance of that operation and importance of the wealth building and really the foundation for that local area as well. So looking forward to seeing what progress you guys get coming out of that in 2025. It is a big asset and certainly an important piece, second to Greenstone at this point, and hopefully it stays that way in the years to come. Let's move down to, short of any other comments on Los Filos, Greg, let's move down to Brazil, Arizona specifically. How are things going there with operations first? And of course, secondly, where we are on that expansion work as well.
Yeah, at Arizona, we had a great start to the year, and then we hit a bit of a speed bump with some movement in our south pit wall. So as a result, we did suspend mining in our main Piaba open pit, which is where 100% of our ore had been coming from up until that point. But we were able to pivot pretty quickly over to our Tatajuba deposit, which is a second open pit deposit on strike from Piaba. we had been working toward going into Tatajuba actually in Q4 this year. So what the team needed to do was just accelerate that, which they were able to do successfully. And we got into Tatajuba this summer, and we've been mining there ever since. And it's been Tatajuba's been great. The surface material is very soft. It's saprolite material. It goes through the plant extremely efficiently. And so they did a good job at maintaining the mine in production in 2024 while we worked on remediation of that movement in the south pit wall. So that's been a big focus over the last number of months is remediating some of those areas in the pit wall to ensure its stability. We're just moving into the rainy season now, so we'll see how that all worked out and how our remediation has worked. But we're feeling very good about the work that has been done. And our intention is to get back into Piaba, into the main area of Piaba mining in 2025. Might not be the whole year, but that is the intent. So we'll have ore sources from both Piaba and Tatajuba. So 2025, I'd characterize as another year of sort of managing around this issue a little bit. But we've made great progress, and getting back into Piaba and then with Tatajuba going is going to be good for Aurizona over the long term. And then in 2025 also, we do have in our budget to build a portal and start to go underground at Aurizona to the underground Piaba deposit. Ideally, we can get down there, get our hands on that ore body, do some bulk sampling, and see what we can do in terms of developing an underground at Aurizona for the long term. It's a very attractive and consistent underground deposit. We had begun a fair bit of work on a technical study on that underground. We do have a PFS out there, but we had been working toward a more formal feasibility study. And what we concluded is it actually made more sense to get underground, get our hands on the deposit, and start to do some of the organic expansion, and then put out an updated report once we've done that work. Teams made a lot of headway in preparing the site for development of the portal. Long term, I think an underground mine will go on probably for decades at Aurizona. And so it's important we get under there. It's going to be an important source of ore feed over the mine life. And then we've got some other satellite deposits at Aurizona, a few that are, we're starting to see some value surface from them, some very close to the mine, some within our claim blocks, but maybe a little farther from the mine. So whether they're sources for Aurizona or not is to be determined. But that whole region is extremely prospective, and it's time for us to start to develop some alternate and incremental ore sources there to maintain open pit over the long term as we also build out that underground.
Excellent. Appreciate that. And then, of course, you've got that expansion potential there, and then you have the ability through exploration upside as well to identify additional sources there for the mine. So looking forward to seeing how you guys run through this in 2025 as well. Any comments on Fazenda and RDM operations?
Well, I think I'll group Fazenda and Santa Luz together. These two mines are very close to one another, both in Bahia. And we have been working over the course of 2024 on a plan that would integrate those two mines into one operating complex, both from an operations management perspective, from a corporate perspective, from a reporting perspective, using the name the Bahia Complex. And so there's going to be some news on that probably in 2025 on that process. I think there's a number of different cost benefits and efficiencies we can realize from doing it, and integrating those two mines together would produce an overall operating complex that is doing 150,000 ounces a year with some good upside. So that's going to be I think kind of a new cornerstone for us. We've got this new open pit we're working on at Fazenda. We've got a new underground area in Fazenda that we're going to start to drill a little more aggressively here in 2025. So I see a lot of potential for the Fazenda mine going forward. Santa Luz, the big focus there has been on increasing the overall recoveries. And in the back half of the year here, particularly in Q4, we have had some success in increasing the overall recoveries at Santa Luz. We've also been doing some drilling just north of the plant and to identify additional open pit ore sources, ideally some that have a lower total organic carbon content. That's what kind of throttles back the recovery at Santa Luz. And the more material we can drill out that has less organic carbon, the better for recovery and for the operation. So I'm actually pretty bullish overall on the Bahia complex as it's starting to come together here. We will have some news on Fazenda, hopefully by the end of this year. Maybe it's in January via an updated technical report. Next year in 2025, we'll update Santa Luz or maybe put together a fully integrated technical report on the Bahia complex. We're just determining what that could look like. But that I think is going to be a pretty exciting overall project for us in Brazil. That would have both Aurizona and the Bahia complex being pretty major production centers for us. And then down at RDM, I was just there in October. They're doing a great job at RDM. It's been a good producer for us this year. Reasonable cost. They're also working there on identifying additional ore sources, and we're working on a mine plan here that'll start to extend the life of RDM as well. It's one of our smaller mines, but it's been a good producer for us this year, and they've got a fantastic team, and we're pretty keen to see what they come up with here for the future of that mine. So Brazil, all in all, going pretty well this year, and next year I think again Aurizona will have another year of kind of managing the pit wall issue, but I would characterize it as coming out of that issue, and the rest of the mines are steady as she goes, with some upside potential starting to be surfaced through some of the work that we're doing.
Just on Santa Luz, real quick, what do you think the recovery improvement, what do you expect there with your guys' ongoing testing and modifications? What do you think the recovery improvement would be?
I think our original budget for this year was sort of 65 at the beginning of the year and the first half of the year, 70 for the back half of the year, and we just weren't quite getting there. And in Q4 here, we've made a couple of changes at Santa Luz. One, from a personnel perspective, the team there is a fairly new team, and they've done a good job at what I would say refining the operations of that plant to really dial in on what's moving the needle in terms of recovery and managing around that. We also had replaced the trunnion earlier this year, which was allowing for more throughput, and it also has reduced the grind size, which, believe it or not, can be helpful and harmful in some ways when you're dealing with a plant like this. But it's also had the effect of increasing production and throughput and production. We installed a desliming circuit there at Santa Luz as well, which we've been in commissioning, and we're still running tests on it to make sure it's doing what we want it to do, which effectively is removing removing the organics without removing too much of the gold, is the best way to put it. And we haven't quite dialed that in yet, but it's something that we will focus on, and hopefully in 2025 we get the desliming operating the way that we need it to. But Q4 we've seen a pretty substantial increase in recovery compared to prior quarters. We're not long term. I think 80 is probably a dream, and 75% is probably realistic and something that we can work to accomplish. Right now, just getting over north of 70 is kind of the near term goal.
Okay, that sounds pretty good, Greg. So I appreciate that work there and the R&D work ongoing to help smooth out those operations. So looking forward to seeing that also improve in 2025. Just come back and look company-wide for a moment, Greg. Exploration upside. I mean, you started to actually talk a little bit about that. The upside in Brazil looks quite promising. Really, company-wide, there's this essentially organic exploration work that can be done to not only add upside here, but also depletion replacement across the portfolio. Just any comments on this front? You started to talk a little bit about Brazil and the potential there and the value add through the organic growth, but just talk generally about the entire portfolio and how you see really that added value component to Equinox here. It's not just an operating company with a fixed set of numbers. It's really additional upside can be had here, as well as you guys seeking to replace that depletion.
We kind of look at it in the context of mine lives to some extent. So, for example, Greenstone's got a 15-year mine life. We're going to be doing some drilling at Greenstone, primarily in the existing open pit, designed to convert inferred resources into M&I and get them into the reserve. There's a very large underground deposit at Greenstone that does deserve some drilling, and it's something we will start to focus on and surface the value over time. But it's not an immediate, sort of critical area to focus on in terms of adding value. Whereas you look at a mine like Fazenda, and a large amount of the mining at Fazenda in the years we've owned it, and I would say it's been undercapitalized, is kind of remnant underground mining, you know, operating phases that are kind of disparate and far from each other. It's not very efficient for use of equipment or for staffing. It increases your costs and it just makes the overall mine a little less efficient. But we've got, kilometers and kilometers of strike there. We've got another underground horizon called Canto. We've got some areas in the deposit that there's enough drilling to indicate there's a very robust ore body there, but there's not enough really drilling that has been done to kind of model out a near-term mine plan on it. We're now focusing some of our exploration results on Fazenda underground to really drill that out and then also expand this open pit. And the point, I guess the point I'm trying to make, not very well, is that on our mines that have shorter mine lives and fewer reserves, these exploration dollars are some of the highest return dollars you could possibly spend in a gold mining company, because you're doing this drilling and you're increasing the mine life and you're creating tens of millions, hundreds of millions of dollars of value through the drill bit, and you're doing that in the near term because of the shorter mine lives at some of these operations. So in areas where we see that potential, and we see a lot of potential at Fazenda. I'm probably talking a lot more about Fazenda than people are used to, but we spent a lot of time there in the last year focusing on what we can do, and it just keeps looking better and better. So Fazenda is an area that we're focusing. Aurizona, Piaba Pit's now been going for a number of years. We're into Tatajuba. We're looking at other near mill sources of ore, and there's a number of them at Aurizona. And again, the underground deposit there is something that we see benefiting the feed grade for a long time. And so it's an area that we want to get underground. We want to start developing that. It takes a long time to kind of build out enough operating phases to really contribute to the mine plan. And so that's something that we want to get started on as quick as possible, because eventually it's going to become a real important aspect of mining at Aurizona. So this year, 2025, and we're still in budgeting now, it's not approved, no guidance, but we are increasing our overall budget for exploration and working to start investing a little more than we have been in the last number of years on growing our resources, growing our reserves at these mines. Otherwise, we've got, of the mid-tier space, we probably have the highest reserve balance, the highest resource balance, I would say, of any mining company. So we're in good shape in terms of our overall reserves, but there's some specific mines where we can create a lot of value with the drill bit, and that's another focus in 2025.
Yeah, thank you for that, Greg. And you're right. I mean, from a mid-tier basis, you guys have quite an inventory. And over the years, just looking back, we've obviously followed Equinox Gold for a number of years. The focus on large CapEx development projects have been really the focus, and Greenstone obviously is the largest yet that's been completed and is now in production. But during that entire time, there's been undercapitalization, I suppose, as you said, towards looking at this organic portfolio of the existing projects and really testing the extent of those. And I think that's where the company is now coming into that phase where it can start to focus, short of any amazing deals out there you're able to pick up, Greg. The focus really comes into expanding that existing portfolio and taking a hard look at testing what the upside is of some of these existing operations where it hasn't really been the focus in the previous years. So there should be more to come there, and it looks like you guys are going to start to exploit that and put more capital towards that in the years to come, now that you have a changing production profile and most likely some additional cash allocation that can be had here given the cash flows from operations. On the M&A front, Greg, any general comments here on the mid-tier and major activity out there? And if you see this will continue as really an earlier stage M&A market as the balance sheets of these companies start to shore up and these companies start to seek out ounce replacement. I mean, where do you think we are in the M&A cycle here in this market? And of course, just any general comments on how you're seeing some of these M&A transactions come out.
Yeah, it's an interesting question. I mean, it feels like there hasn't been that much, but when you look at 2024 and you look at the gold space, especially at the mid-tier level, there's actually been a fair number of pretty chunky M&A deals over the last 6 to 8 months. I mean, we spent almost $1 billion buying the rest of Greenstone. IAMGOLD just bought the rest of Côté. You saw Newmont start the divestment of some of their Canadian, Australian assets, and those were some pretty chunky deals, especially for the Canadian mines that they sold. We saw the big Australian deal announced just about a week ago by Northern Star. So, these are some pretty sizable transactions and pretty sizable financings in some cases that have gone along with them. So there seems to be appetite. Certainly, there seems to be support from the investment community for M&A. I mean, certainly we were very well supported in buying the rest of Greenstone. And I think that where there's transactions that make a lot of, industrial and institutional sense to do, more companies will do them. The reality is it remains extremely difficult to find and drill out and then develop a mine. Permitting timelines are extremely long, and the gold price is high, or at least it's been strong in this year. And so, finding opportunities that deliver near-term production and hopefully some growth on the back end, those are going to be attractive to a lot of companies. And a lot of companies have come through a fairly challenging, I'd say, the last 10 years, but maybe it's not that long. But volatility, I'd say, and through inflation and some weaker gold prices, especially in 2022. And now you've seen inflation level out, costs level out, but the gold prices remain fairly strong. It's a great time for delivering cash flow, and if you can find opportunities to build on that, I think they could be attractive. I mean, that's like anything, M&A can be really challenging. Finding opportunities is always challenging, but there has been a lot of activity in the last number of months and the back end here of 2024, and so I would expect to continue. When you're in the industry, you hear things, you talk to people, and I don't get any sense that M&A is going to be slowing down in the gold space in 2025.
Certainly, I think we still remain to be in early stages here of some of these M&A activity. And then, valuations also are quite suppressed in the junior segment as well, so which probably helps to elevate that on certain cases. So I do think we'll see quite a bit more here yet to come. So I appreciate your comments there. It's good to hear from someone as well connected in the industry as you are as to some of the things that are happening out there. And I know you guys keep an eye on these things as you continue to evaluate things for Equinox as well. Well, Greg, short of any other comments, great to chat. Good update here. Let's leave it there for now, but I will ask just our wrap-up questions here for potential investors who are listing in. The company has a market capitalization of about 2.7 billion US dollars. Why should Equinox Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
I mean, the easiest answer is that we're still in the early stages of ramping up our Greenstone mine in Canada. Greenstone is it's one of the newest, it's one of the largest open pit gold mines in Canada. These mines, like Greenstone, and especially in a jurisdiction like Ontario, are incredibly rare, incredibly valuable. We've seen some of the other companies developing large scale mines in Canada have a pretty meaningful re-rate in their share prices as they've brought these mines into production or advanced construction. I don't think we've seen that quite yet in the Equinox share price. And I think as we deliver on Greenstone, demonstrate that we are in a position to deleverage the balance sheet, I think that we should start to enjoy some of that re-rate that some of these other companies have had. And I think it's a great opportunity for investors to participate in that.
And Greg, how best can interested parties reach out to the company?
Website is equinoxgold.com. All of our contact information is on there. We're also on X and LinkedIn and some other social media sites as well. But the best place to go is our website for sure.
Well, Greg, really appreciate the time you took here to update us on progress and operations at Equinox Gold. We do look forward to chatting again soon. And of course, you're welcome back anytime.
Appreciate it. Thanks for having me.